sustainable investing has suddenly become a very sort of topical issue. Many trustees are finding members, particularly in DC schemes, are particularly interested in responsible, sustainable, more impactful investing. So the whole purpose of the guide was try to demystify it, show the opportunities, look at some of the push as well as pull factors, and to recognise that this is actually not something about giving up return, but potentially enhancing return in a world where there are scarce return opportunities. Impact is increasingly important because we all have an impact in our personal lives, as trustees, as investment managers, as companies and governments. We all have a complex series of impacts on the world around us, on society, both negative and positive. But there are an increasing number of challenges in the world, whether they be social dislocation, lack of inclusion, whether it be climate change or maybe better climate volatility. So I think it's really an imperative on all of us to think about how we can actually contribute to creating a more sustainable, more resilient system. Because without that, the net present value of pension fund assets is going to be severely challenged. So we think this is very timely to look at all our roles in actually creating a better investment environment, but generally a better planet. One of the sort of great mythologies about impact investing is about accepting sub-market returns. And while there are opportunities for many individuals to actually do philanthropic investing where there is no return on capital, actually for the wider community, returns are very important. The sheer scale of the needs in the global society, as represented by the SDGs, some $93 trillion needs to be spent in total. So the only way that we're actually going to be able to address those unmet needs in global society is by finding scalable opportunities. The only way that you ever scale things is by having an attractive rate of return that brings capital in. And so therefore we think impact investing represents that beta of future growth. Therefore it is an opportunity to tap into exciting, innovative, emerging growth opportunities that might not be correlated with some of the more traditional factors in the market. So no, it's not about giving up returns, it's potentially about enhancing long-term rates of return.